Hello everybody, I'm Chuck Gibson and this is Loveland Beacon Talks. Today my featured guest sitting here with me in our remote studio B is Brent Zuch. Most of you here in Loveland are going to recognize that name. Brent has served on the Loveland City Council in past years, and when he wasn't running the city as a city council member, Brent worked in the mortgage industry. And he's currently a branch manager with GFS, Gold Financial Services, Home Loans. So today, we're going to learn a little bit about Brent's background, and then let's dive into the housing market and mortgages right now. How's that sound, Brent?
That sounds great.
Welcome
Let's do it.
Welcome to the show. It's good to have you.
Appreciate you having me on.
All right. So tell me, again, I said we're going to give people a little bit of a background. A lot of people that are going to listen in are going to say, I know that guy. Some of them probably went to high school with you, but just give me a little background on Brent Zuch.
No, that's true. I grew up here. I delivered the Loveland Herald, your old employer, in the Heights as well as Pheasant Hills, and so worked at the Golf Station, if anybody remembers the old Golf Station, which is now a parts place. I joined the Navy 3 days after Christmas when I was 17. My parents had to sign for me.
Wow.
And I went in that summer. I took the summer. I was working at the mobile station up in Montgomery.
So did you do the Great Lakes Training Center?
I did.
Oh, wow.
Yeah.
Okay,
Great
going.
mistakes is what they call it. I think the day we got there, it was not raining, but it was well into the 90s, and the humidity was near 100. It was really, really hot. And the day we left, it was snowing so deep that they were shoveling it off the sidewalk so we could get by. And
now you got to tell me. So, did you guys march?
Oh yeah.
Yeah.
You do the
In the heat
basic
and everything.
same thing that any of the other ones do.
Yeah.
There was a thing called there was a certain flag they put out which meant that you weren't allowed to exercise people to death if it got so hot. Yeah, and that actually was out when I first got there. But yeah, I was platoon leader. I did well in the Navy. I had a number of I got some medals. I got some meritorious advancements, and
Nice.
I was a radioman. I did a couple tours in the Gulf.
I was going to ask it. So you're you're giving us the story too. It's like when. So time wise. So you were in the Gulf.
Yeah.
So that gives us an idea of.
Well,
What
so
years
I was
was
there
that?
for the Iran-Iraq War, which was the run-up to Desert Storm.
Okay.
So actually, I had started at Miami University, and I was getting letters from the Navy saying, "You're still in school, right?" Because when Desert Storm started, they knew I had been there running comms in recent times, and I think they were interested in having me back if I wasn't making the grade. So. I went to Miami. I got a political science bachelor's degree, met my wife and some of my best friends there.
And you're allowed to say, I met my wife, Lynn.
My wife, Lynn.
A familiar name around the area right now.
Lynn, city planner, Lynn Zuch, that's correct.
Yeah.
And we live in the original log cabin in Pheasant Hills. Most people don't know that that exists. I take this occasion to say happy birthday to my twins. Who grew up there and now are going to Miami and UC.
You can say their names.
Amanda and Haley, doing great. They're making President's List and doing really well. So we're really proud of them. They're great kids.
And you said so. Happy birthday to them. As we're recording this on Wednesday, they had their birthday on Tuesday.
Tuesday. So
Yeah.
being off to school, I ordered some dinner for them, and then we're going to celebrate on Friday.
22.
22. Yeah.
And then there's that question, how did that happen?
100%. I know. It seems like yesterday.
So, wife Lynn, Amanda and Haley,
Yeah.
22 years old. How did that happen? We already decided that. And then, how long did you serve in the Navy?
I was actually in 9 years before it was active, and so
Wow.
most of that time I was on a guided missile cruiser or a minesweeper.
Wow.
Yeah. So it was. I'll tell you, seeing nothing but water for days, weeks, months on ends, it'll give you a lot of perspective. Seeing other cultures, all that, it'll definitely widen your horizons.
Tell us, and that's a little bit eye-opening. We might have you back again.
I'd be happy to come back.
Spend some time talking about
I
that.
always have time for you, Chuck.
Yeah, but the other thing is you've got some perspective. We're not going to get deep into what's going on all around Loveland, but a little bit. What's it like serving on Loveland Council? What was that experience like for you?
Well, I would say for me it was a little different from the average council member because my degree was political science, and when I got out of college, I was running, actually, a lot of people probably know this name, Mike Fox, formerly Mike Fox Highway. I was running his campaign. He was,
oh wow,
yeah. He also went to Miami back in the day, and so I got him reelected, and then he asked me to come up and work at the House of Representatives, State House of Representatives.
Yeah.
And he was chairman of the Education Committee, so I was staffing that committee. I was senior staff there when the school funding suit came down. I also worked on teacher licensing. They were certified prior to that point. I worked on the governmental office building in Hamilton. There was a lot we did.
You brought some unique experience in terms of the political arena when you came to council here.
I did. Maybe one of the biggest ones was then, and this came out of the school funding suit, was I helped write some of the law to create the Ohio School Facilities Commission, and then I went over. And Lynn was going to Ohio State to get her master's in city planning at that point.
Right.
She was very gracious and agreed to go up there with me, and they gave her a full ride and even an internship at the Department of Development. And so we were up there for 3 years, and then I became senior staff on the Ohio School Facilities Commission, and I would go around to school districts all around the state and go before, go into their gymnasiums and give these speeches in front of their towns about how these programs work and how they can qualify and what they would get from them and what have you. And part of the deal was they needed to pass at least a small operating levy or capital levy to maintain the buildings after the state came in and fixed them up. So having said all that, I came back. We decided to come back to my hometown of Loveland after she graduated. And I bought a house down on Wall Street, which I still own today.
And let me back up real quick. I didn't mean to interrupt you, but we didn't tell the people. Obviously, many of the people who are listening to this that already know you are going to know this. But you just said came back to my hometown. And shame on me, I didn't say Brent Zuch, not only formerly a Loveland City Council member, but you're a graduate of
Class
Loveland
85.
Yeah, so
we just had our class reunion. Yeah. And I emceed and DJ'd that, so Class 85, nothing but the best.
Well, shoot, take over the show. I'm just going to sit back and roll with you, man. But no, so I didn't want. We'd be remiss if we didn't say, hey, you're a native.
Yes.
This community means something to me.
Well, it really does, and I guess that's part of the thing too, Chuck. Like between the time that I left to go into the Navy and then went off to school and then worked in the state capitol. It was 15 years before I came back. So when everybody here in Loveland has heard this term: Old Loveland, New Loveland, Old Loveland, New Loveland. What does that mean? Old Loveland, I grew up here. What is that? What's that? Define that. Probably means you feel it's too crowded, and you wish that it would go back to the way it was in some regards. New Loveland, feels pretty much the opposite way. I'm probably not from here. Probably want to see more progress and what have you. I'm both. I grew up here. I agree that that we have traffic issues at the bridge in Old Loveland. That are very challenging to address. But I was also the guy who said all along that Old Loveland had a lot of promise back when my good friend Scott Gordon was looking to lease and eventually buy the works and create a destination. But there really wasn't a whole lot. When Tano first was talking about open a white tablecloth establishment, people were like, well, that'll never work. I'm like, yeah, I think it will. So it does my heart a lot of good to see it succeed as well as it has. There was a lot of pushback on some of the things that we did when I was on city council. I would agree with people that say that the new development where Graders is and what have you is too imposing, right? But that was not our vision when I was on council, right?
No, I'm aware of that.
Yeah. And so, but it's still better than the feed store and the few buildings that were there before. It was not highest and best use. And I believe in smart growth. And I believe that the steps that we took led to Loveland being able to take that next step, where there are, frankly, more amenities in Loveland, and there are more things for more people to do. I mean, let's face it, the bike trail is booming. I mean, people come from miles and communities around. I hear it in other communities. I wish we had what Loveland has, you know. And so I'm very proud of my hometown. I'm proud of the work that we put in. I want to see good things continue to happen for it. Yeah.
Well, that's a pretty good sketch of Brent Zuch. I
Little
appreciate
bit.
that. No, I think that's great for the listeners to hear.
Thank you.
And you and I will talk offline more about, because, well, you know, I could say the same as you. I like both. I mean, the progress and the development,
Right.
you know, has its place, and it's been some of
There's
it's
a flip side
some
to
of it's been
everything.
some of it's
Like
been
if you
very
gain
good.
something, you'll probably lose something, but you got to figure out the balance, right?
But the idea, like, and I'm not a native of Loveland,
Yeah.
but I came here, and I think I've been very fortunate that the people of Loveland, like as you'd say, the old Loveland,
Yeah.
kind of adopted me.
Yeah.
You
That's
know,
true.
I don't know why.
It's a welcoming
But
community.
yeah, and so
It is.
Loveland became like family to me. So that
Yeah.
old Loveland piece is, you know, that's in my heart.
Mm-hmm.
The enjoyment of all the amenities that you mentioned is a different part. But this isn't about Chuck. So we want to move. I want to say so. With that background, with the political science and the experience you had and serving on council here,
Yeah.
how do you get to the world of finance, mortgages, and the housing market,
Yeah.
which you've been a part of now for a
Since
good-
'99,
yeah.
started in '99,
Yeah,
so
26, you know, 26
yeah,
years.
26 years November. Actually, my mom was a realtor,
I see.
and so I had some familiarity. But we bought a house. It's actually one of my best friends moved into it recently, down on Wall Street by Union Savings, and Linda Sporing-Lay, her mom and my mom were good friends, found it for me. I told her I would like to eventually use it, you know, as more of like a commercial building,
Yeah.
and she told me about that one, and it has been a good investment for us. We lived in it for 3 years, fixed it up.
Yeah.
Point is, Linda referred me to, she handed out 3 cards, loan officer cards to me. And plus I have my own banks and credit unions, what have you. I contacted 7 people, okay?
Wow.
And I could tell, like, my credit union had no idea what they were doing. That I already knew more about VA loans than they did. The majority of them never picked up the phone or called me back. I believe 5 of them never even contacted me.
That's pitiful.
Yeah, it's terrible. And then one guy, Ron Jordan, who also is a local Lovelander, God rest his soul, he passed here recently. He was a mentor to me. He was my first loan officer. And he was just very giving of his time and gave me a lot of great advice. And we became lifelong friends. And the house that I was buying was zoned commercial residential. Okay, it had been a dentist office. Actually, a bunch of my friends have lived in that house. Jason Wright Lawn Care. He lived in that house. Rented it from Jim Grethel's dad.
Oh, wow,
Jim
yeah.
Grethel lived in that house. One of them ran out in the road naked when they were a little boy. I don't remember which one.
That
But-
was Jim
It
Gresham.
sounds like Jim,
No,
but
I've
it could
heard-
be
no,
Jason.
seriously,
You know
it
that
was.
story?
No, yeah, I've heard
Okay,
the
all right. So don't tell him I said that. Anybody.
Either that or he told me it was his brother, but I definitely heard the story.
But yeah, that house has some history. So I think it had been maybe an insurance office and a doctor's office and an attorney. It's professional zone, meaning
Sure,
it's
right.
appointment only type businesses, not retail, what have you. So anyway, VA was a little iffy about the whole thing because they were afraid you're not allowed to use it for a commercial loan. It's a residential loan. There were certain aspects of it that would still look like an office, right? And so I negotiated. The list agent, frankly, was a problem. And I ended up negotiating directly with the owners to have them make those changes. I offered to put money into escrow. I guaranteed them that I was creditable that I was all set to go so long as they got these changes made, and because they really wanted to sell it as a commercial building, but they hadn't been able to, and they didn't want to make these changes and then have to put it back on the market and not be able to market it that way. So it worked out. It worked out well. So I go to closing, and Ron tells me that his boss wants to talk to me, and he offered me a job. And at the time, I was on contract with the state to continue to go around to these school districts,
Sure.
and promote the programs that they had for school districts, so that people would get it directly from the source, as opposed to misreporting or misunderstanding or what have you.
Guys like me in the media.
Not so much the media, but you know how it, I mean, a lot of these communities were very, very rural, and didn't have a lot of news sources to begin with. And then the opposite spectrum was they were very urban. So that's where most of the money was going early. So he offered me a job. He's like, if you were able to hold that deal together, which he said I'd given up on a long time ago, then you should be able to do this at a high level. And I said, well, I am able to answer a phone and return a phone call. Apparently, a lot of people in this industry can't do that. So I thought I'd get
back to those 5 who didn't.
Yeah, exactly. So I thought I'd give it a shot. The contract was going to expire, and so I did. Believe it or not, 99 we were coming off a subprime crash. Ever heard that phrase before? Yes, we've had several.
I got to open up file drawers in the back of my brain to pull up that memory.
Yeah. So there had been, like, everybody remembers the 08 subprime crash, which we never really did a whole lot of personally. But yeah, there had been a few. There have been a few different times where subprime would become a very prominent part of the market, and then it would crash for one reason or another. That was just happened to be the worst one. So yeah, I mostly initially I was doing a lot of grant money through OFA, Ohio Housing Finance Agency, down payment assistance. I still do. I still love working with first-time home buyers.
I got to write that one down.
Yeah, OFA. Yeah, I still love helping first-time home buyers. They don't know what they don't know. I just never forgot what it's like to be a first-time home buyer. As you tell, as I tell the story.
Yeah, that's a big deal.
It is, and it's so hard. I feel so bad for them because
it's
right now,
a scary place.
Well,
for any home buyer.
But this generation. There are so many things that, in my opinion, are so much harder for them than the prior generations, and this is one of them. And so now, there's not enough inventory, which drives up the prices. There's not enough new home starts, so that's not that can't take the pressure off by itself. The taxes are up, which is a huge problem, and the taxes are following the values, which our prices are up because there's not enough inventory, and the insurance is up.
And you're talking, when you say tax, we're talking property.
Property taxes, correct.
Just to be clear.
It's a real problem, and there's a lot of talk in the state about what's the state going to do. Honestly, they need to do more, and not just that, but I think it's disingenuous for the counties to say it's the state's problem, because I am seeing different counties that are saying we are going to provide tax relief at the county level. You can do it at the county level, okay? Let's be honest. The state does need to do more. And the other thing that concerns me, talking to first-time home buyers particularly, but really all homeowners, is when a lot of these places, what I'm hearing is them saying, "Oh, we're just going to increase the Homestead Act." Well, that only applies to the retirees, and I understand why they should have more. But everybody's taxes have gone up a lot.
Right.
And it is a burden for everybody, and it's especially a burden for those first-time home buyers. So if you want to do that, fine, do that. But let's not exclude everybody else.
Right.
But by the same standard, with inflation going up, and the price of the houses going up, the insurance is up quite a bit itself. So PITI, principal, interest, taxes, and insurance, that's what a housing payment's made of when it's escrowed.
Right.
It's all up. and that makes it harder for a home buyer. It also makes it harder for them to come up with their down payment, because like FHA, which is the most common first-time home buyer program, is 3.5% down. Well, 3.5%. I bought that house for 105. Let's just call it 100 for round numbers. Okay, that's $3,500. Well, the average house isn't 100 anymore. Okay, it's not 150. Let's just, even if it was 2, that's that's now 7,000, right? So it becomes that much more important to have multiple down payment assistance programs, because not one size fits all. Some of them won't qualify for certain ones because they'll be over income limits. A lot of them have income limits. Most of them are going to have first-time homebuyer education. I believe in it. I think it's worthwhile. So there are different things out there for the first-time homebuyers. That's one thing I specialize. Of course, of being a veteran, I have a big heart for fellow veterans and the VA stuff. So, just a quick word on VA. One of the reasons we do them really well is because my company, family-owned, third-generation mortgage banker. I'm going to explain what a mortgage banker is here in a minute. Okay. They're based in San Antonio, and there's a big military base. So we, as a company, do a lot of VA. Okay. Now, to explain what a mortgage bank is.
Loveland.
That's right. So a mortgage bank. You know what a bank is? Checking, savings, car loans, business loans, sure, retirement accounts, all that. And one of the things they do that's the hardest is a mortgage, to be honest. So, they offer a lot of different things. We specialize in mortgages. So that's all we do. Okay. I'm not going to Gold Financial Services and saying I want to open up a checking account. You don't do any of that. Okay. Strictly mortgages. So when you do one thing, you become an expert in that thing. You specialize in that thing. Now, there are others who only do that one thing. There are brokers. Right. And I was one time I was not a mortgage banker. I was a broker. I was an operations manager for kind of a high-end broker that did a lot of new construction, what we called Alt-A, which was they were more loans for usually self-employed people, doctors and lawyers who had a hard time proving their income, but had good assets and high scores and what have you. But anyway, so mortgage banks lend their own money and they underwrite their own loans. Okay. A broker doesn't do those things. That's what distinguishes us between a broker. Okay, so we're in complete control of the process. Yeah. Now, a mortgage bank may also service a loan. Okay, and we do provide servicing as well. Now, we, like most lenders, will sell some of the servicing. That's how you manage your cash flow versus sure, your asset balance.
Well, that's all. Frequently is a big question with home buyers. As they get a mortgage, are you going to service this loan or are you going to sell this loan?
Correct.
So that's a big.
And I don't always know, to be honest.
So let me ask you this, because the idea or the notion is that it's always bad. They sell their loans off.
Right.
It's not that bad, or is it?
No, it's not bad. Because, look.
Why is it okay?
The reason it's okay is because the mortgage is actually a contract between the home buyer and the investor. Okay? And it defines the terms and conditions. So the only thing that changes when it's sold is where you send your payment.
I got you.
Your terms and conditions remain the same. Now, would I prefer not to have mine sold personally, which it has been? Yes, because now I got to go change how I pay it. One time.
Right.
It's a small hassle. Prefer.
It's in the details.
Yeah. But the majority of the time that we sell somebody's servicing, it'll be before they even make their first payment.
Right.
Okay. But the bigger point is, by us doing our own servicing, that we can abide by the minimum rules. Okay. There's a thing called guidelines, and that's the written rules. Okay. And then a while back, and I was actually part of the project for this us and another lender, automated underwriting. Okay, that's basically a computer model where you input the person's information, including the price of the home, scores, income, debt, all those other things, and it comes back and tells you can or cannot get the loan. Fannie Mae has one, Freddie Mac has one, and all the government loans, FHA, VA, Well, USDA has their own thing, the Rural Development Program, but they also run through those platforms. If you put somebody in, originally it was done to make sure people weren't discriminating. So people who might have different demographic factors would get the same approval, right? If their financial picture was the same, right? But what we found really quickly was that people that were really strong in some areas might be able to push particularly their debt-to-income ratio higher, much higher than what the guidelines normally. Guidelines was always possible when you were manually underwritten by an underwriter. You still get an underwriter; they still have to look at the automated findings and match up all the documents and all that stuff. But it gave us a much higher degree of flexibility. So those are two different bars that you can clear. If the automated underwriting comes back and says, yes, you could go to a 50% debt-to-income ratio, right? Whereas conventionally they usually want you at 38%, you could buy more house, right? Okay. And we'll still use the written guidelines for a thing called a manual underwrite. And that's where, the automated underwriting system comes back and says, I'm not saying no, but I'm not saying yes. Let the underwriter decide. It's kind of in the gray area. Then if you meet the written guidelines verbatim, every single bit, then we'll still give you the loan where most places will not. There is an additional bar called overlays, okay? And that's when a lender says, I don't care what the guidelines say. I don't care what the automated underwriting says. I'm not going that high in ratio, or I'm not going that low in score. So getting back to VA has no maximum debt-to-income ratio, and they have no minimum score. So I would tell you the majority of the lenders out there are saying you got to have a 620 or a 580 or a 640 to get a VA loan, and I'm not going to go over, 45, 50% debt-to-income ratio. I've personally done one in the 60s. Where the guy what he was a firefighter who worked multiple jobs, and I couldn't count all of his income. There's income, and then there's qualified income.
Right.
And I couldn't count all of his income because part of it was coming from part-time jobs he hadn't been on for 2 years. Yeah. So it made it look like his ratios were in the 60s because I couldn't count it all. So I was able to do it when other people couldn't. So, the point is a lot of times I can approve people when other people are turned down. And also,
that's a key difference.
It's key difference.
Specializing in mortgage lending as opposed to a regular bank that does everything else.
Yeah, and again, and not even all mortgage banks are created equal. They could have overlays as well. Yeah. And the other thing is sometimes I can approve someone for more. Sometimes I can't find anything in my price range where this lender has me pre-approved. And I might be able to get them pre-approved for more.
We're coming close.
Okay.
To the close.
There is one other thing.
But I wanted you to touch on, some of the impact, or what do you say are the key impacts on the housing market and the mortgage? Is it right to say the mortgage market or the mortgage
industry? Mortgage industry. But the housing market definitely they're interconnected, obviously. But so is the entire economy.
What do you say, like if you were going to rattle off in the next, 3-4 minutes, what are those key factors right now that are impacting? Because as you said, the housing prices have gone up. Yeah. And of course, along with the taxes. Right. So what are the challenges, or what are the three key things if I said, give me three key things?
Well, I think the biggest thing that has impacted everything, you can go all the way back to the pandemic changed everything, right? Sure. And not much for good, right? A lot of people started moving around a whole lot during the pandemic. There was a move to a more walkable urban community, and a lot of people were like, let me out of here. And they started moving back to the suburbs. There was runaway inflation that began about 4 years ago or so. And that's a huge factor. That's a huge factor. Yeah. It impacts everything. Right now, I would say interest rates is probably the main thing. Fortunately, they did reduce them a week ago. Right. Not as much as some speculated. About 3 years later than they originally started saying they were going to. There may be another couple to come this year and a couple more next year. That's what's projected. And so we are. I've talked to some realtors and loan officers about this. We are already seeing some loosening of the market. Now the rates were already starting to come down.
Right.
The market. There are so many.
Well, the anticipation was that the Fed was going to lower the rate.
Yeah.
So we saw some
Right.
movement there. You guys felt it obviously as well a little bit.
But what they control is the rate of overnight lending between banks. So if one bank has a lot of deposits, another one has a lot of withdrawals, and they're short cash, the other bank lends them, and that's the rate they're controlling. So that's the shortest of short-term money. We got the longest of long-term money. Most of ours are 30-year terms. Right. So we more closely follow the 10-year bond.
There you go.
Okay. All right. So it does have an impact, though. It all has an impact. But I would say other things that happen in the economy have an even bigger impact. Like we had a jobs report recently. That had an impact. The GDP, there are so many different things in the economy as a whole. Generally, when people are looking at the stock market and saying, I'm feeling a little uneasy and I'm going to put some money into some bonds, that's when rates go down. Okay, so they already started coming down. The great thing about that is that we're currently in what they call the lock-in effect. Okay, and what does that mean? Well, it means there's a lot of people out there who would like to list their house today and downsize or move somewhere else or upsize or whatever. They got
one reason or another.
They got a good reason to move, right? But they're not going to give up that 2.5%, 3%, 4%, 5% interest rate.
Right.
So the speculation is if we can get closer to 5, that a lot of people will be like, okay, now I feel good enough to go ahead and list my house and go look somewhere else. I want to emphasize this, Chuck. When my mom was selling real estate back in the late 70s, there was nothing selling in the 70s, by the way, early 80s, rates got close to 20%. These are not bad interest rates.
Right.
Look at your credit card bill. These are not bad interest rates.
No, right.
Okay?
Well,
we got spoiled.
That's the thing. Would we like it to be, because we did get spoiled, would we like it to be at that 3%, that where we were spoiled?
Of course we would. And you know what? I just think the main thing is when you say 3%, I think we probably need to let go of that. Like things that are in the past are in the past, right? I mean, you got to pay your bills. I got to pay my bills. I'm not telling you that you should give up a 3% interest rate to take, a 6.25% interest rate. If you need it to be 5.5% or what have you. But I'm also saying, like, if you're sitting it out, thinking we're going to get back to 3 anytime soon, that's probably not realistic.
Yeah.
Yeah.
But how about this? And if you feel comfortable with it.
Yeah.
So, what main tip would you give, let's say, home buyers right now?
Yeah.
What would be your main piece of advice to, actually, each the home sellers right now and the home buyers right now? What's your...
home buyers obviously get pre-approved.
Right.
Get pre-approved. Like, let's not put the cart before the horse. A lot of people want to go out and look at houses. It's a free service to find out what you can afford, what your payment is. That's all free, no obligation. At least here it is. I know places that do charge.
Yeah.
It's kind of like professors with attendance policies, right? The good ones didn't need it. The home sellers, I would say with your home seller, probably the best thing is, and check with me, I know some good ones, is get with a realtor early on to start planning. It's like, just like I say, it's never too early to do a credit check to get your pre-approval. I don't mind doing it more than once for somebody. They only last about 60 days, but, to make sure there's nothing bad on your credit you didn't know about, etc. But if you get with a realtor well before you list and ask them, what should I do? Because in today's market, we've been in a seller's market for a long time. Like a lot of things you thought maybe you needed to do, maybe you don't need to do all that. And you don't want to throw good money after bad if you're just going to sell the house. Now, there are some things for sure that might be smaller things that you could do that aren't that expensive. You might need a little longer, runway to get it done.
Right.
That would increase the value quite a bit. So those would be the big things. Can I say a word about my specialty?
I was going to say we're gonna close with
Yeah, that'd be great.
And I would rather you said it than me try to say. So, again, for everybody that's listening, we've been talking with Brent Zuch.
Yeah.
And talking a little bit, especially at the end here.
Yeah, and thanks
about
again
the housing
for
market, and
letting me come on.
the mortgage industry. So share. Who are you, and how can people reach out to you after they've heard this? If they want to, you can point them in the right direction for realtors, or you can certainly help them with their mortgage.
Yeah, I appreciate that, Chuck. So I'm actually the branch manager at GFS Home Loans. I recently moved my office from Blue Ash back to Loveland for a couple reasons. I was ready to come home. I'm in the old Totes building. I actually arranged to get some lobby furniture for him as well. My whole office, the old Time Warner building, if you knew that, on Reed Hartman, I was in the Twin building. Those were all originally on that whole strip were P&G buildings.
Right.
They just tore it down. So I didn't have any choice. I'd been looking to downsize for a little while, since the pandemic anyway. People just don't come in the office as much as they used to. The best way to reach me is always, and it has been for years, and you can text to this number too, 513-477-3834. Again, it's 513-477-3834. You can always find my website, and there's some helpful tools and information, and even a place where you can apply online at BrentZuch.com. That's BrentZuch, good German spelling, .com. That'll take you right to my website. I'm the branch manager there, run the P&L. But I did want to say, after the pandemic, if you're going to be in this industry for a few decades, you have to reinvent yourself every now and again. Markets change, okay? And after the pandemic, I decided to go out and get this is one of the hardest things I've done in a while, honestly, a certification as a certified divorce lending professional. Okay.
Yeah, and you were pointing that out to me, and I was like, I'm going to have to let you tell that.
Yeah.
The CDLP and what that all means.
So my whole career, I had a couple times where this happened before. Divorce is very different now than it was from the 70s. In the 70s, people would try to, aggravate each other through their kids and all sorts of, they didn't talk to each other, they wouldn't look at each. Now people are a little more adult about this, where they try to do better for their kids jointly, and they try to figure out, this is a bad situation, how do we not make it worse, and what have you. So I had a couple different times where couples would come into my office, and they would come in together, and both times she said, could I refinance him off the mortgage? Can I afford that? And we did. And then she left, and he stayed, and he said, can you get me pre-approved to buy something else? And we did. Yeah. And I was like, wow, that was really adult of them, right?
Sure.
And then I would have all these other times where somebody would come into me and they would say, hey, I had 1 year to get my ex off the mortgage so that it won't be in their debt-to-income ratio on their credit report,
right,
so that they can go out and buy something else,
yeah,
right? And I would run the numbers and they wouldn't qualify. And I'm like, if they just would have rejiggered a few things on the front end, right? Like if I could have talked to them before they got divorced, then that would have been really good, right? Because then they would have been able to refinance.
Right.
So I met a guy through my title attorney, John Jonas, introduced me to Terry Mooney, who's a great guy, mentor of mine as well. And he showed me that he was involved with the CDLP. Actually, he was involved with the organization itself. And so what it was, I went through 2 weeks of all-day classes, 5 days a week, 8 hours a day, and then had to take this test. And it was a really hard test. They said a good percentage of people do not pass it and don't even try again. And so it teaches you a lot about your industry's rules and regulations as it pertains to divorce, as well as things like tax law and some financial advising, to make sure you're not recommending things that cause people tax liabilities or what have you. And I think one of the main lessons is you need to work hand in hand with those people, with those financial advisors and CPAs and divorce attorneys. But I'll give you a couple examples of what I found out my industry was wrong about, at least the way I had been trained everywhere I'd ever been. So a lot of times this divorcee would say to me, well, I should ratio because those things on my credit report, my ex-spouse is required to pay as per our divorce decree. And I'd be like, yeah, but it's on your credit report. And they're like, yeah, but legally I'm not required to pay it. And I would take it to my boss, I'd take it to the underwriter, I'd take it to the head underwriter, head of the company, didn't matter. And they'd be like, well, is it on their credit report? And I would say yes. And they'd say, well, then you got to count against them. You want the guidelines say? The contract supersedes the credit report.
Right.
Now, the creditors don't care. They're not going to take you off. Right. You committed to it, and if that other spouse is late, you are late. That's the danger. I would recommend that as part of the settlement, if there is a settlement, let's try to pay off those joint debts first, so that doesn't happen to you. Right. But short of that, I'm like the only place I know of where it's like I don't have to count that against you. Yeah. You know, that's one aspect. I'd say the other big one is that. When you go to pull equity out of the house as part of the settlement, now keep in mind this can't be used for anything else, just the settlement.
Right.
Okay, if that's all it is, that's considered a rate and term refinance as opposed to a cash out refinance as per the guidelines.
I got you.
Never knew that. There's a huge difference on what the rate's going to be, how high you can go on your loan to value, like 90% of the value versus 80% of the value. There's just a huge difference, and one of the big differences might be whether or not you qualify.
Well, and at the end of the day, as we wrap up, these are things that truly benefit people going through that challenge of a divorce, and you're certified to help and make sure you understand those differences in the rules and help them through it.
100%. It's a tough enough situation to begin with. The last thing you need is to go into a lender and get turned down when you could have qualified somewhere else. And really, another quick word for any of the attorneys out there, I can help. Like if I talk to your clients when they first start the process and take them off your hands on this piece, right, where they get the peace of mind to know, yes, I can qualify to stay in this home, or I could qualify to buy another home of this amount. And what you should understand as a divorce attorney is that sometimes it's just a matter of, instead of someone taking a settlement of this amount, maybe you give the spouse you give them some support for, maybe it's just like 3-4 years, right? So you reallocate how that works.
Yeah.
So that they can qualify to reach their goals. Because once that divorce decree is final, it's very difficult to go back and do it.
Yeah, you can't change that.
Well, you can, but nobody wants to.
It's
better to do it on the front end.
Put it this way, you're going to pay to change it.
Yeah.
Because you got to get the attorneys going again.
Yeah, and everybody has to agree.
Well, Brent, thank you very much.
Thanks, Chuck.
I learned some things about you and your background today. And certainly, I think we all learned some more about what's going on in the housing market and the mortgage industry today. Hopefully, they'll help some people.
Hope so.
And now they know how to reach you. And again, the simplest thing, you can text him 513-477-3834 or Brent Zuch, BrentZuch.com if you want to, check out the website.
Love to hear from you.
Contact you. So again, thank you so much for joining us. That's it for this edition of Loveland Beacon Talks with Brent Zuch.
Thanks so much, Chuck.